Rich and I back. Do a little stock talk tonight. I'm gonna lead it off. I think Rich is gonna talk about some of the stuff he's been doing with Charles Schwab, and he's got some new info for us. And then I'm gonna talk about some of my new indicators I've been using. So let's go ahead and get it going.
All right. Let's see here. So first, I'm going to start off with we're gonna start doing something new here, and what that is we're going to present something that normal folks don't talk about. So and when it comes to reading all the financials or whatever the case may be, it's these things that you read that you kind of just glance over because you're searching for something else. And an example would be like the PE of the company. Everybody, that's kind of like one of the first things you hear about is the PE. And so you go to look at their financials and you skip over a lot of stuff and you find you're looking for the PE, and then you maybe Google like what the PE is and such, and then you get the number that you want. In this case, I stumbled upon a thing called beta. So you're going to see this sometimes. I'll go ahead and search something here. Let's just do Apple, or let's do Verizon. So as it's loading, so what is beta, right? So beta is something happened here. So what beta is it's kind of like a measure of volatility. So what it does is it compares that actual company to how the volatility matches the stock market as a whole. So in other words, if that company is really volatile, meaning it does large swings, it goes up and it goes down tremendous amounts, then you're going to have a higher beta number. Right, and then if it stays, if it's kind of matches the flow of the general stock market, then it's got a beta of 1. Now, if it's below a beta of 1, then typically you're gonna find a kind of a safer stock. So you can apply this number if you want something that is gonna kind of not get too crazy on you. It's not gonna jump around too much. Like let's say you want to get in something that's kind of neutral. Maybe you're doing a iron butterfly, which I'll talk about next. Then you ultimately want to get in something that's kind of like just kind of steady. It's a little more steady than the stock market. And the stock market alone, give or take, pending news or the economy or whatever else. Right now it's kind of volatile, but in general, the stock market's it's a big behemoth of a thing. So having a company that's has more volatility than the stock market is riskier, and it has its mood swings, so to speak. So this beta will kind of give you some like guidelines, like, oh, okay, this is a pretty solid company. It's pretty stable. So when I'm looking for different things like I want to get into for iron butterfly, then so right here you see beta of Verizon is a 0.35. That means that Verizon's more stable than the stock market right now. So in this case, like Verizon would be, depending how you kind of analyze the charts and the history and the ups and downs, and the amount it swings, of course. But it does show a more stable company. So if you go into something riskier, like I don't know, I'm not going to name anything. I really don't know right offhand. But if you go into something riskier, that's kind of like, the beta is going to be a lot higher. So if you go to like,
what's the highest beta you've seen
here? So I've only been searching for low betas, but right now I'm gonna try to screen something here that has a high beta, just as an example. I'm not gonna get all in depth or anything. It's just you can go to FinViz here, because I could spend an hour just talking about this alone. So you can go to FinViz here, and it says like, if you want something crazy, if you want something very aggressive, and you can analyze charts and you can capture something, this beta could come in handy as well. So I don't know what the heck is going on with this computer here, but I mean, it doesn't help when my son's on some very high definition video games over there. So like you can do over 3.
Yeah.
Yeah, he's killing. You know, I got Max. I mean, the text is fiber, but so over 3. Let's look at some names here. Like, I guarantee you, we're not going to really know any of these names because there's a lot of volatility. You know, they're not solid companies. I mean, you know, you got a lot of $1 million companies here.
Yeah.
Which is million is like $10 nowadays. I mean, let's be honest here. Yeah. So.
I mean, all these companies are under $5. What's that one that's 20? Was that AR? That's an oil company.
AR.
Yeah.
Yeah, Resource Oil EP. Mm-hmm. Yeah. So I mean, the PE is good, but the PE is a variable as well to the kind of the size of the company is how I take it. Yeah. So if you go like let's say a beta under 0.5, which is like a very solid company. You, in theory, I hope I'm right, but you'll start seeing companies that are kind of, you can do. These are all A's, so I mean, but you know, you start seeing companies that are like that have, I mean, it's just one indice, right? So
yeah,
beta.
It's just a tool.
So beta.
Right?
Beta is a tool of many tools, and what it does is it measures the stock's historical volatility, right? And it compares it to the market.
Okay.
And stocks with a beta of 1 or less is safer, is less has less volatility than the market itself. So if you want something that's has less swings, then you want to go with a lower beta. All right. So that's pretty much what a beta is. The key takeaway is the number 1. So do you want something with more volatility? Then you go above 1. If you want something that's less volatility than the market, then you go below 1. And that's it. The answer is 1. So, and that's kind of the general scheme for beta.
How are you using? Are you using the beta in any of your methods right now, like screening, or is it like one of your primary things you're looking at, or is it like something? If you get a couple stocks you're interested in, then you kind of use the beta.
All right, yeah. So like I started getting interested in options, right? And then it quickly evolved into like, okay, I can do more than one option here. So now I got these different things, and somebody gave them these these names here called like Iron Butterfly or Iron Condor, and so I started like looking further into it. But when you get into those multiple leg options, they call it, then you're looking at like neutral patterns, right? So when somebody tells me that something's neutral, that means that they're not going to go up or down, right? That means that they're going to go sideways. They're neutral. Mm-hmm. So with that being said, I don't want a company to go up and I don't want a company to go down. I just want a company to stay right where it's at. And what I started looking at was, if I want a company to stay right where it's at, what am I going to look for? Am I going to look for PE? No, because PE is going to tell me if the company's going up or down. Am I going to look for a PB? No, because a PB is also going to tell me if it's a company. So a lot of these indices outline like if the company's doing good or bad in the long term, if they're going to go up or down, right? So I started looking at an indice that's like could capture the stability of the company, like the volatility of the company. Mm-hmm. So, and I found this thing called beta, and I was like, well, this beta is kind of interesting. So I started doing screeners for very low beta, and to combine the beta, I also look for like high market cap. So the more money a company has, ultimately, the safer it's going to be around longer. Yeah. It's going to survive through the ups and downs. So I wanted something with a well-known company that I'm familiar with, that has a large market cap, and it also has a low beta. And what I settled on was Walmart. And to be honest, let me go ahead and search Walmart here. To be honest, like, okay, if you talk to, I mean, you could talk to a homeless guy on the side of the road in the middle of Wyoming, and he's gonna know what Walmart is, right? Everybody.
He's probably stole the shopping cart from him.
I mean, everybody knows what Walmart is. So, right? So, like, is Walmart gonna go away tomorrow? Probably not. You know. But is this company called, you know, disregard, like, this is my beta poll, but let's say whatever Alavon or whatever, like, is that gonna go away? I don't know. I've never even heard of it, right? So what I did was like, okay, so I'm gonna go. It really just gives me a warm and fuzzy, right? So I'm like, all right, look, because I'm testing, like, I'm kind of dipping my toes in the pool, and I'm like, yeah, it's kind of warm. I think I'm gonna jump in. I'm just gonna jump in, you know. So right now I'm testing the water, and I'm like, all right. But one thing I do know is beta is a number, and beta is used all around. And I guarantee most of these folks that are watching this right now, they always overlook beta. Yeah. Because it's like, who cares, right? Nobody cares about beta because even the name sounds stupid. It's beta. Who cares, right? So, but beta actually means something, and it's volatility. It means the risk. It's the risk of the company. So as you can see, Walmart is a 0.53. That means it's a low risk. It's 0.5% of the volatility. It's half as volatile as the stock market. So think of it like if it's a 1, it's 1-to-1 ratio. It matches the stock market. If it's 2, it's twice as volatile. I hate that word, by the way. It's volatile. Volatility, I don't even know how to say it.
We're going to sit here until you learn
it. All right, yeah. It's painful for everybody, I know. So it's double the volatility of the stock market, right?
Yeah.
So what I'm looking for is, like, ultimately I want it like 0.01 right now because I don't want it to move at all. I want it to be dead in the water, like stay right where it's at, because that's what you need for iron condor. So
now
I think I'm gonna pass it to you, and then we'll pass it back to do the iron condor next, maybe.
Okay.
Instead of just knocking out both mine at the end, but so iron condor is more like you don't want it to move, right? So beta's a good thing. So I chose Walmart. I was like, you know what? I like Walmart. It's a big company. It's got a lot of money. Yes, it's overvalued. Yes, it's this. Yes, it's that. It's not me. Look at the PE. PE is 45. But again, PE is based off of the size of the company. I mean, they say 20s and below is good, but in this case, PE 45. Like, who cares, right? So I'm looking for a company that could just be boring for a while. I just want it to be boring and just sit there and do nothing, you know. And Walmart is notorious for that. And on the plus side, it pays dividends. So not only does it have a beta, but it also has dividends, which means that a lot of folks are buying into Walmart just to hold it.
Yeah. Like,
they're not buying and they're not trading this like a hot commodity. They're just buying it and holding it. Right. Yeah. So that's what keeps the beta. My theory is that's why the beta's low, and that's why it just stays there. It's just kind of dead in the water, and it's a solid company. It's giving out dividends to their people, and they're collecting. And I'm pretty sure if I get digging into revenues or whatever else, the earnings per share, I'm pretty sure that they're a pretty solid company, right? They're just it's not moving, you know. Yeah. So yeah, that's my breakdown of beta. I pulled up NerdWallet. I love NerdWallet. I don't know if anybody else does, but I refer to NerdWallet a lot. But NerdWallet says also that you know, it talks about other aspects of beta, and to be honest, like, it always falls back on the number one, like. Below number one is a less riskier company, and above it you're doubling the volatility compared to the market. It's all comparison of the market. Yeah. If you want to just say what market, like, I would just go ahead and just call it the S&P 500. Yeah. You know, it's it's as volatile as the S&P 500.
Yeah, yeah.
So,
Makes sense. Cool.
all right, let me
Yeah. So,
stop presenting here.
so for my topic here. So recently, well, I mean, I didn't. Well, yeah, I had to. My old computer was shitting the bed on me. Wasn't gonna make it. So built a new computer. And like anything, when you get new technology, you have to transfer over all your other things to your new platform, right? And I use Thinkorswim as like my main trading hub. But whenever I loaded up Thinkorswim on my new computer here, did not have any of my previous indicators saved that I was using, and I couldn't remember exactly what I was using on my old thing. But I also took it as an opportunity, and that's our richness. We talk a lot. Like, it's always good to sort of revisit what you're doing, review what you're using, and that's kind of what I did. And I went and looked through a couple different websites. I found this one that had some good information on it, and I sort of cherry picked some of those indicators from this to put onto my Thinkorswim. So I'm just going to go over that real quick. So, moving average. I use the exponential moving average, which it takes into account a lot of different things, but it's more of a smoother line. I use a 200-day moving average line, and really, while Rich is more interested into the options trading and looking to capture those stocks that aren't moving much, I'm kind of doing the other thing where I'm more of a bull, so I'm looking for those stocks that are moving upwards. So I use this moving average to find stocks that are above the moving average line, and this picture here is this red line, right? So if it's above the line, then that's where I'm interested at. Volume's another good one. Pulled up volume. Like you need to see how much volume a stock is trading at, because if it's not moving a lot, then it's going to be hard to be a swing trader, because you need.
Oh yeah, trust me.
Yeah.
It'll literally, like, you're like poking it with a stick.
Yeah.
Are you gonna do anything? Like, oh, it moved a penny.
Yeah.
24 hours, it moved a penny.
Yeah. So I'm looking, if it doesn't have like daily volume of like couple 100,000 at least, like, I'm not interested. Like, I'm really interested.
I don't mean to cut you. I don't mean to cut you off, but you started to make me think now. Maybe if I go with a low beta and a low volume, like, shooing for a condor.
Yeah. I know. I was thinking about that when you were talking about the low beta. Like, I wonder how that affects the volume too. But here's a new one that I was kind of using. It's called ease of movement. And afterwards, I can give everyone a look at my Thinkorswim. I don't think you'll be able to see it the way I present it on here, Rich, but I could just show the people afterwards, probably at the end. This ease of movement indicator, all it really does, and the other thing to note about these indicators is there's no silver bullet, right? Like, we wish that there was. Like, we could just say, hey, use these 3 things and you're guaranteed to make money. Not the case. All the ease of movement is it takes a look at the volume and how it relates to the price action and how likely it is to move in any sort of direction. So as the volume's changing, as the price is changing, then this line will move. You can watch it real time if you're in something that has a lot of volume. It's pretty cool. So it'll help. How I use it is that it helps me when I'm sort of narrowing down the stocks that I'm interested to get into. I'll look at the ease of movement, and if it's pointing upwards, I'm like, oh, okay, this might be something that I'm interested in.
Do you know if the ease of movement is forecasted for a certain amount of time? Is it like is the ease of movement for the next 14 days, or is it like is the ease of movement for the next like day?
It happens real time. So
real time. So it literally can fluctuate within like the hour.
You can watch it move. Yeah.
So it's a good day trader tool.
Yeah. Yes. Yeah. Yeah, you can watch it moving. So I'll look back a few days just to kind. And the other thing I like to do too is the way that these are all set up on my Thinkorswim. They're sort of vertically, so I can kind of look back historically and see what the ease of movement looked like in relation to what the chart looked like, and that'll help me kind of identify, where it's kind of going. You know what I mean? If that makes sense. RSI is a good one that I've not used in the past because I guess what is it called? Is it contrarian? Like when you don't want to fucking blend in with the pack, like I'm always trying to find my own road sometimes. So I'm like, I'm not using RSI.
Well, that's how people.
Yeah. But,
yeah, that's fine.
Yeah,
Whatever.
yeah, but then I was just like, you know what? Let me look at this thing. So all RSI does is it tells you if it's overbought or oversold, right?
Exactly. Yeah. It kind of mirrors the PE in a way.
Kind of.
I think.
Yeah, it's just a graphical depiction of that, which is sort of what I'm trying to do because I don't want to buy things that are overbought because if you overbought, usually means it's going to fall, right? So
it's going to go down.
Yeah.
Right? Yeah. If it's red, you're like, oh, that's good, but you know what? You're in for the long haul then because it's going to go down. I mean, chances of it going down are good. I mean.
Yeah. And then
Stochastic Slow, I love this one. This is my favorite one.
Yeah, so I looked at it. I was going to add it and then decided not to. But I know you love it.
I've looked at these damn things, and this one I think outdoes the RSI. In my opinion, this one's especially the Stochastic Slow is really good. I think it kind of nails. I mean, you can line it up with the actual share and look up and be like, okay. So it was down. What's the slow say? And stochastic slow is usually like 1 or 2 days difference of the actual movement, and it's pretty impressive. I liked it.
Yeah. So I was looking at it, and I looked at on Thinkorswim they have several variations of the stochastic oscillator. They got the slow, they got the full, they got 3 other ones that I can't even remember, and I couldn't pick which one I liked or whatever. But as I was looking to fill out my last slot there, I was reminded of the PMC, the old tried and true person's market catcher.
Market catcher.
Yeah. So
variation relative strength.
Mm-hmm. So this uses a bunch of different indicators and puts them together to give you sort of an idea of where the stock is going. And what it looks like is this on the bottom right here. So if it's this cyan color, then that means it's outperforming the market. So sort of like how your beta, you were saying, like, the 1 is the 1-to-1 means it's like right in line with the S&P 500. Again, this is referring to the S&P 500 as the market.
Oh, wow. I thought it was just it's just showing it's going up or down.
No.
I didn't know it was comparison to anything.
Yeah, so it compares it to the S&P. The dark blue means that it's still outperforming, but it's weakening. So it's either right in line with or starting to fall below the S&P 500. The red is underperforming, where the S&P 500 is basically beating it, and then this purple color, this magenta color, means that it is below the S&P 500, but it's strengthening. So I use this also along with all my other indicators to get a good idea of what the stock is doing, right? So if they're all saying the same story or a very similar story, then I'm like, all right, cool, I'm in. And then it's hard to see maybe here, but this yellow and blue line, I have it colored differently on mine. But that's kind of like the RSI overlay. So the yellow's
it's like
good.
Going down.
Mm-hmm.
Yep.
Yeah, yellow's good, blue's bad. So just to clean it up for me, I turned yellow to green and blue to red. So it makes sense for me.
Yeah, it pops more.
Yeah, but
I can see it. So the latest on this one here is like it's kind of showing it's going up, and it's not. It's still below, it's performing less than the S&P, but there's positive movement on here. I mean, the line's yellow and it's going in that peakish.
Yep.
It's getting away from that red.
Yep.
So, I mean, but those bars are pretty long. I mean, let's be honest here. So
Yeah,
I guess
haven't-
you look at the other days. I mean, kind of
Yeah,
compare it, see how long it took to shift like that, you know, to the
yeah,
blue.
yeah, and I'm not exactly sure if the length of the bar has any I'm sure it probably means something, but I don't know if that's volume. It might be volume because it does take into account volume too.
You know, it makes me think like I wonder what it would look like if you like overlay it with some sort of maybe dividends or earnings reports and see where those fall in those, and you know, and you can see the trend of the company. Like every time it gets earnings, it goes down, or I don't know, maybe.
Yeah, when I show at the end, maybe I'll take a look at that. Um, it's and we could see that again. Again, like the way that this presentation is going to be set up, I don't think you'll be able to see the data, but I'll talk through it. But yeah, you want to go over. So those are my indices. That's how I'm all set up right now. Had a couple winners this past week. Seems to be working. So
You had it like way more. I think you had it way more advanced. I think you're starting from the basics again, right?
yeah, well, and that was the other thing. I mean, I'm glad you brought that up. So when I was putting this all back together, I mean, I still have the Ichimoku Cloud on there, which I didn't go over that indicator, and I still have my standard deviation channel on there, but I definitely had a lot more on the main chart, and I just didn't want to look at all that stuff anymore. You know what I mean? Like it was almost becoming distracting to me. You know, instead of trying to have like, because I was almost in the other camp. You know, there's usually two types of traders: the ones that are looking for like the magic bullet, like give me the one indicator that's going to tell me everything I need to know. Right? Either you got those people, or like the camp I was in, where I was like, put all the indicators on there. You know what I mean? Everyone.
I'm just gonna stare at it.
Yeah.
For 5 hours,
Yeah.
and then try not to fucking fry my brain.
Yeah.
Because a lot of these indicators, they contradict each other.
They do,
You
yeah.
go crazy.
Yeah.
You'll go crazy.
Yeah. So I just picked like the ones that I wanted to see that I felt were useful. I still have the PPS buy and sell indicators on there. I'm not. Yeah, I used to treat those like the gospel, but I don't. You know, I'm not doing that anymore. But I do like to see.
Yeah.
You know, it's funny too. It's like I'm normally buying into them a day or two before the buy signal pops. So to me, that's like the validation that I did the right one. You know. You want?
Let me give me 1 second. I'll be right back.
Okay.
Give me one second.
Yeah. Rich has got a badass sword in the background there, and a spear. I think on the weekends, Rich does boar hunting. Oh, there he is.
Oh yeah, that's my Spartan sword.
Yeah.
This thing is actually
Yeah.
This thing is actually like fully forged. Like
Yeah.
it's a straight. Like it's an actual sword.
Yeah.
You know, this isn't like a replica. This is
Yeah.
well, I guess it is a replica, but it's an actual sword.
For home defense.
It's actually sharp too. Like,
yeah.
yeah.
I see that.
You know, I mean, you got to represent the Spartans.
That's
right?
a warrior ethos, you know.
Warrior ethos. Yeah. I'd hate to get hit by one of those.
I would
This
not.
thing's
Really,
really top heavy. You
It
know?
looks, yeah. Be careful over there.
I think your arm, maybe take your arm off or something. Maybe I don't know.
Yeah.
It'd be a bad day.
I thought you were boar hunting with that.
Boar hunting?
Yeah.
I just buy my pork at the.
Oh,
grocery store,
okay,
really.
yeah.
I would love to boar hunt though. I bet you the pork's even better. I mean,
Yeah, I bet it would be.
But
you know, we could have like what they do. What's that thing called? Whenever they put it in the ground and cook. They do it in Hawaii. The Kahlua pork. Is it? Not Kahlua. Was it Kona? No. Is it Kona pork?
they wrap it in like banana leaves or something.
Yeah, stuff. It looks delicious.
Yeah, it's like I think a lot of Southern folks do that too. Like it's almost like a smoker.
Yeah, we called it pig picking back east.
Big picking.
Yeah.
All right.
Iron
So
condors.
I'm gonna go over iron condors. What in the world are iron condors? All right. So I found this website called OptionStrat. It's pretty cool. It's a very user-friendly website. I had no issues navigating it. I highly recommend you check it out if you're interested in the next level of options, because this thing here will help break it down for you. Almost common sense, like, oh, okay, I get it. And then this is a good kind of like a baby step to ultimately creating your own spreads, right? And most likely the folks that are watching this are like, what the hell is, I don't even know what a damn spread is, right?
Yeah.
So this website here will kind of walk the dog for you. You might, your first terms you're going to hear as an option is covered calls or cash secured puts. But this thing here, it kind of opens the doors to a whole bunch of different options trading. And the main key takeaway is, what's the movement of the company that you're looking at? Is it going to be going neutral? Is it going to be going down, up, left, right? So you got to figure out, like, what are you settling on, right? Now, in this case, for an iron butterfly, you want the company to be going sideways. You want it to be trading neutral. So you don't want it to go up and you don't want it to go down. You just want it to stay right where you got it at, right? So I'm going to open up here a iron butterfly, and then I'm going to open up an iron condor, and I'm not even going to really get in the weeds of like the actual stock that is in my portfolio. I'm just going to break down what an iron butterfly and iron condor is. All right. So for an iron butterfly, if you look right here, that is the body of the butterfly, right? This is my take on it. This isn't, I might be wrong. Somebody might be watching this thinking you're full of shit, man. But you know what? This is how I look at it, and I don't care. So this is how I don't care. This is how I look at it. So this is like the body of a butterfly. If you ever seen a butterfly, which I hope everybody has, you know, you got this little tiny skinny little worm looking thing, you know, with little legs. There's nothing to it, right? And you got these huge ass fucking wings that are connected to this little shit body, right? So it comes to a real point, right? So if you flip this upside down, you know, you got kind of like a butterfly look, and that's how I look at it. Now let me switch to an iron condor, and then we'll see the difference here. Now a condor is a bird, right? It's like it's got a bigger body. It's not like a damn butterfly. So an iron condor is going to have a larger body to it, and then it's going to have these wings. I mean, I think a condor has some big ass wings, but in this case the wings are small. So another way to look at it is you got a pyramid, and you got like a pyramid with the top cut off. Like Jerry said here, you know, it's kind of like the Aztecs or the Mayan pyramids, right? So you got the Egyptian pyramids and you got the Mayan pyramids, right? Now back to what the hell you're looking at. So for the iron condor, what you're saying is you're going to buy a covered call. You're going to buy a call and you're going to sell a put at 145, which is right there in the middle, right?
Not a covered call, right? Because we're not buying this.
No, not a covered call, because you don't own anything.
Yeah, just a
so
long
you don't
call.
you don't own. Yeah, maybe I will just go up into my trades, but you don't own anything. Like
Right.
I don't even own Walmart. I have 0 Walmart in my portfolio.
Yeah.
0, right? So I'm gonna go here, and I'm gonna go to a trade. See if it works here, and I'm gonna go to options here. I'm gonna skip the chains. Like when you get into the chains, when you're getting better at it, you can set your own prices how you see fit. There's other videos on YouTube. I've already found them. There's this one gentleman that's really smart. I've watched his videos, and he's already on the next level of selecting his own money, his own prices. In this case, this website kind of tells you exactly what you need to do. So it'll literally tell you what prices to purchase it at and what, you know what I mean. So it kind of builds it for you.
You want to click
i.e.
that positions tab real quick?
Yeah. So if you click on the positions thing, it'll break it down for you. So you buy to open, 135 put. You got the date in there, and you got sell to open, 145 put with the date. It's all going to be March 17th in this case. So you got sell to open 1, sell to open with a call, 145 call, and then you got a buy to open with a 155 call. So what you're ultimately doing is you're creating kind of like a spread. So this is the middle, the top of the pyramid, and then you got the low, the right, and then you got the left, right? So if it goes up, this is your safety net right here. This is your safety net. And then if it goes down, here's your safety net. Ultimately, you want it to end somewhere in this pyramid before or at March 17th, right?
You don't want to hold it to March 17th.
So if you go past March 17th, then you're gonna get, most likely you're gonna purchase it, and you're gonna own it at whatever price. So with that being said, Walmart's $146 a share. If you do 100 shares, I hope you have $14,000 standing by you. Right? Yeah. And chances are you can't even do this trade unless you have margin. And I'm hoping that they won't even honor this trade unless you have enough margin. So I really don't know how the brokers do it, but just keep in mind, like, this type of strategy is literally getting in and out without actually buying it. Unless you got the money. I mean, if you want to get into Walmart, then go for it. But
you're just trading contracts.
In my case, you're kind of just trading. You're playing with the options. You're playing with contracts. Yeah, that's what you're basically doing. Yeah. So here I am. I'm in I want to get into Walmart, right? So I type in like WMC. It's right there, anyways. So all right. So I don't want to do a call. I don't care about a call. I'm more advanced now. Right? So I'm gonna do an iron butterfly.
Oh, they even got it right there. Yeah, look at that.
They know what it is. Like all these different things. Like, and don't get it twisted. I'm not advanced, right? So like I don't know. There's a butterfly put. There's a sell. I don't even know what these are.
Yeah.
I really don't. I don't know. And, maybe, the more I look at this stuff, the more I'm going to learn. The next thing you know, I'll know everything there is to know about all these different things. Yeah. So, and that comes with time. So here I am. I'm going to buy this iron butterfly, Walmart. Why? Why am I buying Walmart? Why? Well, first of all, it had a low beta. I like it, right? Mm-hmm. It's a solid company, right? And maybe I could apply some of the indices that you had, like your volume. Yeah. If this thing has huge volume every day, maybe I should stay clear of it. I don't know.
Yeah.
But this one has 8 million volume, right?
That's pretty good.
So I don't know if that's a lot, or is that just a normal, or so. And it all depends on how much volume Walmart has every day. If 8 millions are like a crazy day for Walmart, like, I don't know. I got to go back into history and look at average volume or something, Mm-hmm. So, all right. So all I do is put this in here. I'm like, all right, cool. Because I'm learning. I'm just gonna go off of what this thing says. It says 145C, 145P. I don't even know what that means. So I'm gonna pull up the options here. I'm gonna say, okay, first step is to buy to open 135 March 17th. Got it. Right, so I go over here. I just want one, March 17th. Switch it to March 17th. Okay, and then I'm gonna go buy to open. I already forgot the damn number.
135, I think.
135. All right, so 135. So 135. Go to 135. Boom. And just to make sure, that is a put. Yep, that's a put. The next one is sell to open. They already set it up for me. Same date. And this one, I believe, is like 146. This is the top of the pyramid. So 145. 145 put, 145 call. Easy day. So 145, this is the top of my pyramid. 145 put, 145 call. So I'm selling both of those. Go Go back here, and then I'm gonna buy to open a call, 155. Okay, it's already there. All right. Now here's kind of the fun part, right? So you got all these. You got the bid, mid, and ask, right? Bid, mid, and ask for all these, right? So it defaults to like the lowest bid for the selling and the highest ask, because this is gonna trade, like no matter what. Like this is like below the market value, so to speak, or at the market, right?
Yeah.
So I can do, if I do market right now, it's gonna mirror this, so 640. You see?
Yeah.
So, but do I want 640? I mean, I'm leaving $23 on the table. I mean, I don't know. Do I really care? I don't know. It depends on how needy I am and how much I want to get. Maybe I got FOMO and I'm like, oh, I want to get in this. It's gonna go up or down, but it shouldn't, right?
Yeah.
This thing should be dead in the water. It shouldn't be that crazy right now. This should be kind of a solid company. So I'm gonna go ahead and just put like a limit credit, right? I'm not gonna go in debt here. So I'm gonna do a limit credit for. I'm just gonna do the actual mid. But in this case, I think it's like Charles Schwab is kind of weird with this. It makes you do like fives. Watch. If I do it, it'll say like you can't do it. It has to be fives only. Some crap. So. Well, it tells me market's closed. Okay, so of course it's closed. So market is now closed, blah, blah, blah. All right, 160.38. All right, so this is what, like, I'm putting in to buy a iron butterfly. Okay, so it's that easy. So now I'm in an iron butterfly. And again, what I wanted to do is March 17th, I wanted to stay in my pyramid. Stay home. Don't leave the pyramid, right? Just stay in the pyramid. And ideally, climb to the fucking top and hang out. Like, I'm all for it. But don't leave, right? So that's what I want. So now, as you go through, after you purchase this, it breaks it into four different trades. So with that being said, they're going to charge you 4 different times for the actual trade price. I think it's 65 cents a trade. So 65 times 4, quick math, it's like $2.50 or something like that. So, keep that in mind when you're doing these trades. You are doing 4 separate trades. Don't get it twisted. But you're doing an iron condor type of strategy trade. And and it can get crazier as you continue to grow.
And then when you close it out, you have to close it out separately.
So now, if I were to close it out, right? So let's see.
Because you want to sell it before March.
Yeah. So like for Charles Schwab's a little different. Charles Schwab makes you kind of do it manually, but you can do it all in one trade. But you still get charged 4 times. But you basically pull up the same dates that you put your trade in, and then you go ahead and like just like buy to close, sell to close. You do those the separate, the opposite of what you did at the end there, and then you'll do sell to close, buy to close, or whatever else, and then you'll just push like initiate, right? And then it'll like put a limit order in or whatever, and then you're in or out. But you can see that's how I'm gonna do it this go around. I'm not gonna do like the ones and twosies. You can like close out 2 of them and keep the last 2 to the very end. You can do whatever you want. So here's the 4 that I got right here, the 2 puts and the calls. So as you can see, 146 is the top of my pyramid. You see that?
Yeah.
And then 150 is the far right, and 142 is the far left, and March 24th. So if I want to do, and it's got it labeled as iron butterfly here, and then if I want to like trade it, see, I'm only pulling up this one trade for that one.
It had a button that said
that one
close positions.
Yeah, I haven't clicked that button yet. I don't even know what that does, but
Yeah.
so maybe I can go back, try it. What the hell? I've been clicking so many damn risky buttons as it is.
Yeah. Well,
What's one more?
the market's closed, so it's not like
Yeah, the market's closed. Yeah.
nothing's gonna happen.
So this is it. So like I said though, this is Charles Schwab. Charles Schwab is kind of like it's a solid brokerage account. Like they have very good like reputation, but at the same time they're kind of a little behind the power curve in the whole like generational type of mindset. They're kind of a little older fashioned, I would say. But let's see.
Closed
What
positions
is it?
at the very bottom.
Closed positions.
Yeah.
Let's see what happens. All right.
Select position. Oh, you can.
So if I check close this one. Now if I click this, what happens?
I don't know. I don't know. I don't know if you. I don't know if you should click that. I just. That's.
Yeah, that's what I'm saying. I don't know either.
But I think that's how you get out of it.
Are you sure?
No.
But what do you mean closed positions? Does that mean I'm doing like a market order?
Probably.
Weird.
Yeah.
I don't want to do a market order.
But I think that's. But I'm thinking that's how you do it.
I don't know. I really don't know. I could try it with one of these other ones that I just like don't care and I'll get out. You know.
Yeah, but I think that's for like. Well, if you click on one of the other ones, it's not an iron butterfly. What does it say?
All right. You know what? Fuck it. I'm just gonna click close position and see what happens. It's gonna be like you just bought 300 shares in Walmart. I'm gonna be like, all right. Here it goes.
All right. What does it say?
What does it do? Oh Jesus.
Yeah. Oh man.
I hope it didn't do something bad.
Oh yeah. See, there's your iron butterfly strategy.
Okay, why is it fucking grayed out though?
I don't know.
Review order?
I don't know.
Oh Jesus.
Go back to your positions.
Go back. Well, I might as well click review order.
All right. Oh, review order.
Okay.
Oh, you gotta put the limit first in?
It's not letting me.
Just click, just clear out of there. I think that's how you do it.
You know what? I think you're on to something though. I think it is. This is how you do it. You know.
Yeah.
I think. Oh look.
Oh
let me
shit.
do something here.
Notice it said 6,000.
So, but it's saying net quote. I think because the market's closed. You know.
Oh yeah.
Yeah. It's still scary. I think I just aged 3 years, but that's fine.
But it does say verify
Okay.
order, you know, so you do got to click a few more buttons. Like you can't just.
All right. Well.
Yeah.
I think okay. So you're probably right. I'll check that out when the time comes.
Yeah, on Tuesday. Yeah.
Jeez, I might, I'll go for it. That's a lot of money, you know. Like, that's three damn orders of Walmart for me.
Yeah.
And as you can see, I don't have enough in my portfolio to cover that. That's a lot of dough.
Yeah, but you're not buying the shares. You're just trading the option.
Yeah, I'm just closing it.
Yeah.
Yeah, you're right. Yeah. You're right. All right, so that's that is Iron Butterfly in a nutshell. You know what I mean? Like,
yeah, I'm gonna check.
and then Iron Condors is kind of cool. It's just here. Let me show you something real quick. So keep in mind the net credit is like this is what it's telling you. Of course, it depends on the actual market where it's at right now. But this is saying 663, and the max loss is 337. So what I'm saying is I'm gonna put up $337. That's my max loss, meaning I won't lose more than that, right? And my credit automatically is 663. So my max gain is 663, and my max loss is 337. So if you go to like the table here, and you go to like profit and loss, so if it stays at like 146, right, and it gets all the way to the end, you see right there 663. You
Yeah.
see that? And then if it goes, let's say it goes up to 149. If it goes to 149 and it is March 10th and I want out,
Yeah.
well, I can go ahead and just get out and I'll make $135, you know. But I'm putting up not the loss. I won't lose shit,
Yeah.
but I'll make 135. So
Yeah.
ideally, you want to end at the top of your pyramid. You want to end right in the middle at the end of the day. 663 is your winner, right?
Right.
So that's what your ultimate goal is. This is your worst case scenario is you get over here to 157, you know, 237 or 136, and you're not going to lose more than 337. You just won't. But again, you definitely want to get out. Don't stay in because yes, you'll lose 337, but you know what? You're going to end up buying that son of a bitch for that. Then your potential loss is indefinite, I think. I mean, at that point. So, your break-even prices are right here. Like, so it has to be between these two to break even. So 138, it has it right there, 138 or 151. You know, if you're in between there, then you're gonna break even. You know, one of these between these two. So, and ideally, again, you want to end at the top of your pyramid, which is 145. And in my case, it's 146 when I bought it. So if I were to go back to my positions, you can see only for the day or so that I've had this, because I think I bought it like 2 days ago. It's kind of to me, it's kind of fun. You know, I enjoy it. So you got one put. I'm gaining 116, but I got a put here that's losing 93. You know, and then I got a call here that's gaining 109, but I got a call here that's losing 177. You do the math, I'm down like $58. But to me, it's fun. I'm watching this and I'm like, ooh, ups and downs. This is fun, you know.
Yeah.
But in the meantime, I just want Walmart to end on February 24th at 146. That's where I want Walmart to be. So I don't want it to go up or down. And it's kind of weird because normal traders, they're looking for the company to go up. That's what they're looking for. And I'm over here like, no. I don't want the company to do nothing.
Yeah.
I don't want it to go up or down. You know?
Yeah.
And then you're going to hear traders say, oh, it went down today. Hell yeah. Fuck yeah, I just made a shit ton of money. Because that's what they wanted it to do. They wanted it to go down.
Yeah.
You know? And I want to say that these other types of builds here, bear put spread and things like that, these capture the ones that are going down. You know, so the sky's the limit. Don't get tunnel vision into one direction here. Like, you can make money no matter what.
Yeah.
If you just play your cards right. You know.
Yeah.
So,
Yeah. That's what we're about, making money.
you get it.
Yeah.
Yeah. You can just capture whatever.
Yeah. All right. Well, I think that's going to do it for our stock talk. We'll keep it going. Figure out what we'll talk about next. I don't know. Probably next week. Do it again.
Yep. Yeah. I'm gonna start pulling up something else. I'll find something that people are familiar seeing, like just like beta. You've probably seen that 100 times and never even realized you didn't even look into it. You know.
Yeah.
So I'm gonna look into something, whether it be revenue gain, what it means, or anything. I don't care. I'll find something. But I'm gonna bring. The goal is to bring something to the table every single time.
Yeah.
Just to continue feeding the brain and to keep the momentum of evolving and learning.
Yeah,
So.
learning and keeping it going. Oh yeah, yeah. And the other thing too. I mean, this is like a Core Plus thing that I learned. We were talking about was we've seen it a bunch of times where like earnings reports will come out and the stock like crushed earnings or whatever, right? And it still goes down, right? And it's like,
that's weird.
What the hell, you know? Well, I've been watching this Trader TV. So I use TD Ameritrade as my broker, and they've got like a Trader TV little channel that they run on Thinkorswim. I've been watching it, and they were talking that the other piece of the pie is like what the companies are forecasting, like whatever they're talking about, where they're going. So, however the investors view that can a lot of times drive when the price falls is because their forecast was shit. So I learned.
So it's not. Wow. So it's not like when the earnings report came out, they must have missed earnings or something. But it's also involves they release like a discussion, almost like a way forward
Yeah,
of
yeah,
almost like a fork, but it's a verbal forecast
yeah,
of the way forward. That kind of trumps the numbers.
yeah. Because if they come out with some weak ass, forecast, like investors are going, like, how in the hell do you plan to do that? You got no money, or whatever, right? Like they're gonna read into it, and then they're like, nah, fuck this, we're out.
So thinking about that, like I'm just imagining myself being the guy to like release the message, right? um,
Yeah.
and I'm just gonna say words mean things,
Yeah, exactly.
right?
Yes.
So if I'm the asshole releasing the message, and when it comes out of my mouth and the market plummets,
Yeah.
I'm probably getting fucking fired.
Yeah. Maybe. Who knows?
Or I'll be repositioned and
Yeah.
stalking or something,
Yeah.
but I won't be fucking releasing no more messages.
Yeah, exactly.
So words mean things, and I hope they're reading it off of something that somebody else wrote, right?
Yeah. Yeah.
So yeah, and it sounds like a game. It sounds like a game, like a strategic way of capitalizing on some shit.
Yeah.
Somebody somewhere, is in cahoots with something else.
Yeah.
And it's a word game, and people listen.
Yeah.
And there ain't no stopping it.
Yeah. Yeah. Exactly. Yeah.
That's crazy.
Yeah. And then I guess I'll share my. So this is my. As I talked about before, I know you can't see it, Rich, but just running through. Yep. So here's my volume right here. The green and the red is my cloud, like we were talking. And then you can see, this is the one I'm in. Here's my ease of movement, and then down here is my PPS, and we can see it starting to strengthen on this stock. But yeah, I'll let you can check that out sometime at the end. But yep, that's gonna do it. We'll see you guys next time.
Alrighty.